How does VA eligibility compare with a conventional loan? Let's get after it. Hey, VA Nation, Jeff Newton here with National VA Loans, powered by Stride Bank. Guys, we get this question a lot. How does my VA eligibility compare with a conventional loan? And it's a great question. Initially, I always wondered, well, why would you even ask? Because if you're doing if you have VA eligibility, why would you consider doing a conventional loan? And then, of course, just like anything else, you dive into it a little bit deeper and you start thinking, okay, well, there's other avenues of this. I've learned that in my life is you can't just off the hip just assume that everything else is not right whenever someone asks a question. It's pretty good standard in life as general. But the way you have to look at it is there's always multiple sides to everything. But let's go ahead and talk about the differences between a VA and a conventional loan to start out, and then we can kind of break down why you might consider it, why a, certain scenarios might consider a conventional loan over a VA loan. So number one for a VA loan is there's zero money down. There are zero money down requirements for 99.9% of VA loans. Now, there are certain scenarios where there are money down requirements, but very rarely do we get into those. And that's typically if you own multiple properties at one time. With a conventional loan or a standard conventional loan, it's a requirement of about 5% down. The conventional does have both Fannie and Freddie have a couple different products that only require a 3% down payment. So there's one of your differences. Number two, private mortgage insurance. On a VA loan, they do not require private mortgage insurance. On a conventional loan, anything above 80% loan to value. So if you buying a home for $100,000 and you're financing more than $80,000, you're going to have private mortgage insurance. Now, some of you might be asking, well, what the hell is private mortgage insurance? Yeah, I get it. It is an insurance not for you. It is an insurance for your lender. Okay. So if your loan is with ABC Mortgage, and I hope there's not an ABC Mortgage out there. If there is, I need to stop using that. But if your home is with XYZ Mortgage and you only finance, or if you finance 95% of it instead of 80%, you're going to have private mortgage insurance. That mortgage insurance is in case you were to default on your home loan. Okay. So it's not for you, it's for the investor or for the lender that you're with. Next is rates. Typical rates on VA loans are a little bit lower than what they are on conventional loans. And the primary reason for that is the VA is guaranteeing 25% of that loan. So the level of risk for your investor is a little bit lower 25% lower than what it is on a conventional loan. So it does save you money on the rate and on private mortgage insurance. And then third or fourth, I don't know where we're on this list, but the next thing would be expanded guidelines for debt to income ratio purposes. On a VA loan, we've gotten loans done up to debt to income ratios of 60+%. Now, on a conventional loan, you're typically capped at 50%, and they really like to see you about 45% or below. Now, what this means to you is that you're going to qualify for more home on that 60% or on that VA loan than what you would on a conventional loan. And you're probably thinking, well, gosh, dang, 60% of my mortgage payment or of my income is going to my bills. That seems like an awful lot. You're right, it is. But you got to think about certain situations. We have people that do a lot of things outside of just their actual job. I mean, the side hustle, that's a real deal, and everyone's got one, it seems like. Sometimes it's really hard to prove that side hustle when it comes to mortgages, and sometimes we just don't want to because the borrower doesn't really want to provide all that information. I completely get it. I don't blame you a bit. Let's go as little as we possibly can to make it easy for everyone involved. But if you do have that side hustle and you are showing a 60% debt to income ratio and you have solid credit and things like that, then that 60% isn't near as bad as what we think. It may be closer to that 40 or 45% like we'd see on a conventional loan. We're just not showing that out there. Now, let's get into the situation of why someone would choose a conventional loan over a VA loan. And there is one and guys, listen, there's probably more, but as far as I can see, there's one reason. So let's say you have a borrower, let's say you're the veteran and you're looking at buying a home and you're going to sell your home, and you've sold your home and you're going to walk away with $200,000 in cash, which is awesome. Congratulations. You made it through these last few years and you were able to cash out some equity. That's great. Now, you want to use some of that equity and some of that money to put down on your new home. So you're buying a new $400,000 home and you say, you know what, we want to put $80,000 or 20% down. We're going to take this 200 and we're going to put up 80,000 of it against the home. Perfectly understand. But let's say you don't have a service connected disability through the VA, so you're going to pay the VA funding fee. And I realize as I'm talking here, I'm unpacking a lot of stuff. Of course, you guys can give us a call, 855-956-4040. If you want to go in depth with this, just ask for me. In fact, ask for Jeff, and I'm happy to go further in depth on all of this. But so let's say that you're going to put that 20% down, and you have to pay the VA funding fee. Well, VA funding fee on $320,000. If you've done it a few times, you could be looking at $8,000 in a funding fee. All right, you don't want to pay that because you're going to be you shouldn't. You're putting money down, so there may be an opportunity to look at a conventional loan. So at that point, what we would need to do is compare rates. So where's our rate on a VA loan and where's our rate on a conventional loan? Keep in mind, you're putting 20% down, so the rate's going to come down quite a little bit on that conventional loan, and it may get pretty close to where it's on par with that, with the VA loan. So what we need to look at then, of course, is, okay, well, what's the rate difference and what's the payment difference? And let's divide that out with my funding fee and see how many months it takes for me to recoup that funding fee. And if it takes over 84 months, typically I would say we need to look at doing this as a conventional loan. Again, we've had a few of these over the years, and I've done VA loans for over 20 years, and very rarely do we fall into this situation. But right now, with people that have held onto their houses for a little bit longer, built quite a little bit of equity since 2019, and they're seeing some of those returns, I can see it being a viable option, and maybe even a question or something we should look at. Now, if you're talking with us at National VA Loans, that's something we're going to take into account every time we look at a loan. It's just it's kind of ingrained into our system. So we're going to look at that and see exactly how it works, and make sure it works best for you, and make sure it makes sense on the conventional loan. Again, to contact us here, it's 855-956-4040. And like I said, I know I've unpacked a whole lot of information, and I know sometimes that can be overwhelming, even in a video that you can stop and rewind and all that kind of fun stuff. And sometimes it's just nice to get on the phone with someone and ask your questions. If that's the case, give us a call, 855-956-4040. Myself or any of our VA specialists be happy to answer any questions you have. Or if you know that, man, I'm getting close to this, I think it's time to pull this trigger, and you just want to get stuff done, check out nationalapplynow.com. Complete the secure and simple mortgage application right there. It'll come to our VA specialist, and we'll make sure to give you a call to go through all the different options you have available to you. And of course, guys, to stay current with all the up-to-date information from VA loans and from National VA and Stride Bank, check out youtube.com/National VA Loans. We post videos on a regular basis. You'll get to know us a little bit. Hopefully you like us. And hopefully, most importantly, you get a lot of good information out of it to arm yourself when you are ready to go buy a house, or when you're calling us to do your loan. You're kind of in the know and know kind of what we're dealing with and how we work. Again, it's youtube.com/National VA Loans. Guys, until next time, thank you so much for your service. Thank you for all you do. Thank you for watching and subscribing to our YouTube channel. We appreciate you more than you know. Again, until next time, guys, take care of yourselves and God bless.